At 9:32 a.m. on March 14, 1958, Ellsworth Bumpy Johnson walked through the marble doors of Manhattan Savings and Trust, wearing a tailored suit that cost more than most Harlem residents made in a month. 62 years old, controlled every numbers racket from 110th Street to the Bronx, cash reserves estimated at $3 million. He carried a leather briefcase containing $50,000 in small bills. The bank's director, Mr. Charles Sterling, was waiting in his corner office overlooking Fifth Avenue.
Sterling had rejected a loan application that morning, a loan for $8,500 to fix the roof of St. Mary's Orphanage on 142nd Street. The orphanage housed 47 black children. Their financial records were spotless, 3 years of on-time payments on their current mortgage. But Sterling had stamped the application with 2 words in red ink: area risk.
Bumpy Johnson had one question for Sterling. What did area risk mean when the orphanage had never missed a payment? Sterling's answer would trigger a 48-hour financial crisis that nearly collapsed a bank with $12 million in deposits. A crisis executed without violence, without threats, without breaking a single law. Just mathematics, timing, and the unified will of 50,000 Harlem residents who discovered what happened when you disrespected their neighborhood.
If you want to see how a Harlem gangster brought a Manhattan bank to its knees using nothing but depositor withdrawals and Wall Street psychology, hit that like button. It helps us share stories about power, justice, and the economics of respect. Back to Bumpy and Sterling.
The meeting lasted 11 minutes. Bumpy Johnson placed the briefcase on Sterling's desk and opened it. $500 $100 bills, neatly stacked. He explained his proposal. He would personally guarantee the orphanage loan. If they defaulted, he would cover it from these funds held in escrow. Sterling didn't touch the money. He leaned back in his leather chair and smiled. "Mr. Johnson, I appreciate your community involvement. But Manhattan Savings operates on certain principles. We serve established clients with verifiable income sources. Money from underground enterprises, regardless of the amount, doesn't carry the same weight as legitimate capital in our ledgers."
Bumpy asked for clarification. Was Sterling saying the orphanage didn't qualify, or that Bumpy's guarantee didn't qualify? Sterling's smile widened. "Let me be direct. Money earned from policy slips and protection rackets isn't worth the same as money earned through honest business. Your cash may spend the same at the grocery store, but at a bank serving Manhattan's finest families, we have standards about whose money we accept."
Bumpy Johnson closed the briefcase. He stood up. He thanked Sterling for his time. Then he said something Sterling would remember for the rest of his life. "Mr. Sterling, you just taught me something important about how banks work. I'm going to teach you something about how Harlem works." Sterling laughed. "Is that a threat, Mr. Johnson?" Bumpy shook his head. "No, sir. Just economics."
Bumpy Johnson left Manhattan Savings and Trust at 9:43 a.m. By 10:15 a.m., he was sitting in the back office of Small's Paradise, a jazz club on 7th Avenue that served as his unofficial headquarters. He had summoned 6 men. These weren't enforcers or numbers runners. They were the people who actually made Harlem function. Malcolm Reeves, who ran the neighborhood credit union. James Crawford, who owned 3 barbershops. Dorothy Perkins, who managed the largest beauty salon in Harlem. Vincent Hayes, a funeral home director. Thomas Green, who owned a fleet of gypsy cabs. And Reverend Isaiah Porter from Abyssinian Baptist Church. Bumpy explained what happened at the bank. He explained Sterling's response about underground money having no value. Then he asked a simple question. How many people in Harlem had accounts at Manhattan Savings and Trust? The group spent an hour making calls, checking records, asking around the neighborhood. By 11:30 a.m., they had a number: 3,847 depositors, mostly small accounts, $50 to $500, domestic workers who banked there because it was on their way to jobs in Midtown, small business owners who used it for payroll, church funds, the Colored Women's Club treasury, funeral savings accounts. Bumpy did the math. If every one of those depositors withdrew their money at the same time, Manhattan Savings would have to produce approximately $890,000 in cash on demand. Banks in 1958 didn't keep that much physical currency on hand. They operated on fractional reserve banking. Most deposits were loaned out or invested. A typical bank branch might keep $50,000 to $100,000 in the vault for daily operations. If withdrawals exceeded that amount, they'd have to request emergency transfers from their main vault downtown. That process took time, required approvals, created paperwork.
And if word got out that a bank was struggling to meet withdrawal demands, it could trigger panic among all depositors, not just the Harlem accounts. This was called a bank run, the nightmare scenario that destroyed banks during the Depression, the reason the FDIC was created. But FDIC insurance in 1958 only covered $10,000 per account. Most of Harlem's depositors had less than that. They wouldn't care about insurance. They'd care about getting their money out before the bank failed.
Bumpy outlined his plan. Starting Monday morning, March 17th, every single Harlem depositor would go to Manhattan Savings and Trust and withdraw their entire balance in cash, not checks, cash. The bank would have to produce the money or admit they didn't have it. Either way, it would create chaos. But the bank run was only phase 1. Phase 2 required someone with connections to Manhattan's financial district. Bumpy turned to Malcolm Reeves. "You still know people at Manufacturers Hanover?" Reeves nodded. He had worked there as a teller before starting the Harlem Credit Union.
Call them. Tell them you heard something concerning about Manhattan Savings liquidity. Don't say it's definite. Just say you heard rumors they might be over-leveraged in Harlem real estate loans that are defaulting. Make it sound like inside information. Reeves understood immediately. Banks in Manhattan talked. If Manufacturers Hanover heard Manhattan Savings might have bad loans, they'd start asking questions. They might even reduce their own exposure, pulling interbank deposits or refusing overnight lending. It would make Manhattan Savings' cash position even worse.
Vincent Hayes raised a concern. What if Sterling just closes the Harlem branch for a few days, claims a plumbing problem or something? Bumpy had considered this. Then our people go to the main branch on 5th Avenue, all 3,847 of them, standing in line, demanding their money, in front of every wealthy depositor who banks there. Sterling won't be able to hide it. Reverend Porter asked the question everyone was thinking. Bumpy, what happens if this actually destroys the bank? People could lose their savings. Bumpy shook his head. The bank won't fail. Sterling will bend before it breaks. But even if it did fail, FDIC covers the deposits. People get their money back within a week. The only one who loses is Sterling and his investors. He paused. And maybe they'll learn something about disrespecting Harlem's money.
The meeting ended at 12:40 p.m. Each person left with a specific assignment. Malcolm Reeves would make the Wall Street calls. Reverend Porter would spread the word through churches on Sunday. The barber shops, beauty salons, and taxi drivers would tell everyone they saw. By Sunday evening, every black depositor at Manhattan Savings would know. Monday morning, withdraw everything in cash. Dorothy Perkins asked one final question before leaving. What are we telling people is the reason? Bumpy smiled. Tell them the bank said our money isn't good enough. Now we're taking it somewhere that appreciates it.
Saturday and Sunday, the word spread through Harlem like a fever. Reverend Porter preached about economic dignity at Abyssinian Baptist. When someone tells you your hard-earned dollars aren't worthy of their institution, you have one moral obligation. Take those dollars somewhere they're respected. The barbershops were even more direct. Sterling called our money dirty. Monday morning, we show him what happens when dirty money walks out the door. By Sunday night, the plan had grown beyond 3,847 depositors. People who didn't even have accounts at Manhattan Savings were telling friends who did. The number rose to 4,200, then 4,500. Some people were planning to bring their children, their elderly parents, anyone who had an account. This wasn't just about the orphanage anymore. It was about every time a Harlem resident had been denied a loan, denied a mortgage, denied service because of where they lived or what they looked like.
Monday morning, March 17th, 1958. Manhattan Savings and Trust opened at 9 o'clock a.m. By 9:07 a.m., there were 34 people in line at the Harlem branch on 125th Street. By 9:15 a.m., there were 89 people. By 9:30 a.m., the line stretched down the block. Every single person had the same request. I'd like to withdraw my entire balance in cash, please.
The tellers tried to process the requests normally at first, but after the 8th withdrawal in a row, the branch manager, Mr. Peterson, called the main office on 5th Avenue. "We have a situation. Multiple customers withdrawing entire balances. All of them are colored. This looks coordinated."
The main office told Peterson to continue processing withdrawals, but to start asking questions. Why are you closing your account? Are you dissatisfied with our service? The answers varied, but the theme was consistent. Taking my money somewhere it's appreciated. Found a bank that doesn't discriminate. Heard this bank doesn't respect Harlem customers. By 10 a.m., the Harlem branch had processed 127 withdrawals, totaling $43,600. The vault was running low on cash. Peterson called the main office again. "We need an emergency cash delivery. The vault's down to $18,000, and there are still 200 people in line." Charles Sterling arrived at the main office at 10:30 a.m. His secretary had called him at home with the news. Something was happening in Harlem. Mass withdrawals. Sterling immediately understood what this was. Bumpy Johnson. The threat that wasn't a threat. The economics lesson. Sterling called Peterson at the Harlem branch. "How much have they withdrawn?" Peterson checked his ledger. "As of 10:28, we've processed 156 withdrawals for $51,340. The vault is empty. I've told the remaining customers we're waiting for a cash delivery from downtown."
Sterling made his decision. "Close the branch. Tell them there's a mechanical issue with the vault door. We'll reopen tomorrow with sufficient cash." But Peterson's voice was strained. "Mr. Sterling, I don't think they'll accept that. They're saying they know what's happening. One man said, and I quote, 'The bank doesn't have our money. If I close the doors, it'll look like we're insolvent.'" Sterling slammed his hand on the desk. He told Peterson to keep the branch open and promised a cash delivery within the hour. Then he called the main vault downtown and ordered an emergency transfer of $300,000 in mixed bills. The vault manager asked for authorization in writing. Sterling shouted that he'd sound whatever they needed. Just get the money in an armored truck to Harlem immediately. But while Sterling was managing the Harlem crisis, Phase 2 of Bumpy's plan was already in motion. Malcolm Reeves had made his calls on Saturday. By Monday morning, the rumors had circulated through Lower Manhattan's banking district. Manhattan savings might be overextended in Harlem real estate. Bad loans coming due. Liquidity concerns. At 11:15 a.m., a vice president from Chase Manhattan called Sterling's office. "Charles, we're hearing some concerning things about your Harlem portfolio. Just wanted to check in on your reserve position." Sterling assured him everything was fine. Just some routine withdrawals, nothing to worry about. But the Chase VP wasn't convinced. "Charles, we have a $2 million interbank deposit with you. We're going to need to reassess our exposure." Sterling felt his stomach drop. Interbank deposits were the backbone of daily banking operations. Banks lent money to each other overnight to maintain liquidity ratios required by regulators. If Chase pulled their $2 million, Manhattan's savings would be below the federal requirement. They'd have to find replacement funding immediately or face regulatory intervention. Sterling tried to sound calm. "There's no need for concern. We have sufficient reserves." The Chase VP said he'd discuss it with his team and call back. Sterling hung up and realized the situation was spiraling. A simple mass withdrawal in Harlem was now threatening relationships with other banks. At 12:03 p.m., the armored truck arrived at the Harlem branch with $300,000 in cash. The tellers resumed processing withdrawals, but the line hadn't shrunk. It had grown. Word had spread through the neighborhood. The bank ran out of money this morning. More people were showing up, including some who had been planning to wait a few days. If the bank was struggling to meet withdrawals, better to get in line now. By 1:00 p.m., the Harlem branch had processed 412 withdrawals, totaling $178,900. By 2:30 p.m., they'd processed 631 withdrawals for $287,650. The vault was running low again. But something else was happening that afternoon. Depositors were showing up at the main branch on 5th Avenue. Not Harlem residents, white clients who banked there, regular customers who had heard something was wrong. A woman asked a teller, "Is it true there's a problem with the Harlem branch?" The teller assured her everything was fine. But the woman had already made up her mind. "I'd like to withdraw $5,000 in cash, please, just to be safe." 3 other customers in line heard the exchange and decided to do the same. By 3:00 p.m., the main branch had processed $47,000 in unexpected withdrawals from nervous customers. This was how bank runs actually worked, not because of genuine insolvency, but because of fear. Sterling called an emergency meeting with his senior staff at 3:30 p.m. They gathered in the boardroom. The numbers were grim. Total withdrawals from both branches, $335,550. Outstanding interbank deposits at risk, $2 million from Chase, plus another $1.3 million from Chemical Bank, who had also called with concerns. If they lost that $3.3 million in overnight funding, the bank would be below Federal Reserve requirements by morning. They'd have to borrow from the Federal Reserve's discount window, which would trigger an automatic examination by regulators.
That examination would reveal that Manhattan Savings and Trust had rejected loan applications from qualified Harlem borrowers based on racial bias, a violation of fair lending laws that were just beginning to be enforced. Sterling's head of operations laid out the options. "We can try to ride it out, let the Harlem withdrawals continue until they're exhausted. We have about $4.2 million in total deposits from that community. If they all withdraw, we'll need to liquidate some bonds, take a loss, but we'll survive. The bigger problem is the Wall Street rumors. If we lose the interbank deposits, we're finished." Sterling asked how they could stop the rumors. His head of operations shook his head. "We can't. Once the whisper network starts in Lower Manhattan, it feeds on itself. The only way to stop it is to show overwhelming liquidity. Announce a capital increase, bring in new investors, something that proves we're rock solid." Sterling knew that would take weeks to arrange. They didn't have weeks, they had hours. Another option was proposed by the bank's attorney, who had been sitting quietly in the corner. "There is one other solution. Fix the underlying problem. Approve the Orphanage loan. Publicly apologize for the way the application was handled. Show Harlem that Manhattan Savings values their business. If Bumpy Johnson calls off the withdrawals, the crisis ends." Sterling's face went red. "We don't negotiate with criminals." The attorney remained calm. "Then we don't negotiate. We simply correct an administrative error. The loan application was improperly rejected due to a misunderstanding of the risk assessment criteria. We're happy to approve it now, with our sincerest apologies." Sterling stared at him. "You're asking me to admit we were wrong?" The attorney leaned forward. "I'm asking you to save the bank." At 4:47 p.m., Charles Sterling placed a phone call to Small's Paradise. He asked to speak with Bumpy Johnson. The person who answered said Mr. Johnson wasn't available. Sterling left a message. "Tell Mr. Johnson I'd like to discuss the St. Mary's Orphanage loan application. Perhaps we can find a mutually acceptable resolution." Bumpy received the message at 5:03 p.m. He didn't return the call that night. The next morning, Tuesday, March 18th, the withdrawals resumed. The Harlem branch opened at 9:00 a.m. to find 200 people already in line. The main branch on 5th Avenue opened to find 47 customers waiting to withdraw large sums. Just being cautious, want to have cash on hand, heard there might be problems. By 10:00 a.m., Sterling was back in his office watching the numbers. Tuesday's withdrawals were running ahead of Monday's pace. At this rate, they'd drain another $400,000 by close of business. At 10:42 a.m., Sterling's phone rang. It was Bumpy Johnson. "Mr. Sterling, I received your message about discussing the Orphanage loan. I'm willing to meet, but I have some conditions." Sterling asked what they were. Bumpy's voice was calm, almost pleasant. "First, the loan is approved for the full amount requested, $8,500. Second, the interest rate is 0%. Call it community investment. Third, you personally deliver the approval to Sister Margaret at St. Mary's and apologize for the delay. And fourth, Manhattan Savings establishes a $50,000 fund for small business loans in Harlem at below market rates." Sterling started to object. "Mr. Johnson, those terms are—" Bumpy interrupted. "Mr. Sterling, I'm watching about 300 people standing in line at your Harlem branch right now. I'm told another couple hundred are at your main branch on 5th Avenue. Chase Manhattan pulled their interbank deposits this morning. Chemical Bank is scheduled to pull theirs tomorrow.
By my math, you have about 36 hours before federal regulators get involved. My terms are generous considering the alternative."
Sterling closed his eyes. He thought about his career, his reputation, the bank his grandfather had founded in 1887. He thought about what failure would mean. Then he thought about what it would take to rebuild from this. "I need guarantees. If I agree to these terms, the withdrawals stop immediately." Bumpy chuckled. "Mr. Sterling, I don't control what people do with their money. But I can tell you this. Once word spreads that Manhattan Savings respects Harlem's business, people might reconsider closing their accounts. Can't make promises, though. Free country."
At 11:27 a.m., Charles Sterling arrived at St. Mary's Orphanage on 142nd Street. He carried a leather folder containing the approved loan documents. Sister Margaret met him at the door. She was 68 years old, had run the orphanage for 23 years, had never missed a payment on any bill in her life. Sterling handed her the documents and said something he'd never said to anyone in Harlem before. "I apologize. Our initial review of your application was inadequate. You're clearly qualified for this loan. Manhattan Savings and Trust is proud to support St. Mary's mission."
Sister Margaret looked at the interest rate line. It was blank. Sterling cleared his throat. 0%. The bank is providing this as a community investment. Sister Margaret smiled. "Mr. Sterling, did Mr. Johnson have anything to do with this sudden change of heart?" Sterling didn't answer directly. "Let's just say we've been reminded of the importance of serving all our depositors with equal respect." By 2:00 p.m. Tuesday afternoon, word had spread through Harlem. The bank approved the loan. 0 interest. Sterling apologized in person. The withdrawal slowed. People who had been planning to close their accounts hesitated. Maybe the bank had learned something. Maybe things would be different now. By 4:00 p.m., the lines at both branches had disappeared. Final withdrawal totals for Tuesday, $178,000, down from Monday's $335,000. By Wednesday morning, the crisis was over. Chase Manhattan and Chemical Bank maintained their interbank deposits after receiving assurances about Manhattan Savings' liquidity position. No regulators came calling, no emergency borrowing required. The bank survived. But the story didn't end there. Over the next 6 months, Manhattan Savings and Trust quietly changed its lending policies in Harlem. The $50,000 small business fund Bumpy had demanded was established in April 1958. Interest rates were set at prime -2%, well below market. Applications were judged purely on credit worthiness, not neighborhood. By December, the fund had issued 23 loans totaling $47,300. 13 of those loans went to businesses that had been previously rejected by other Manhattan banks: a dry cleaning shop, 2 grocery stores, a taxi service, a funeral home expansion. Every single one of those loans was repaid on schedule. Charles Sterling never publicly acknowledged what happened during those 48 hours in March. In interviews, he described it as a temporary liquidity challenge caused by an unusually high volume of withdrawal requests. He never mentioned Bumpy Johnson. He never mentioned the orphanage. He never mentioned the lesson he'd learned about disrespecting Harlem's money. But people in the neighborhood knew. They knew what had happened. They knew who had made it happen. And they knew one other thing. Their money was worth exactly the same as anyone else's. It just took 3,847 people walking into a bank at the same time to prove it. Bumpy Johnson never spoke publicly about the incident either. When asked about it years later by a reporter, he said only, "Sometimes people need reminding that economics works both ways. Banks need depositors as much as depositors need banks." The reporter asked if he'd threatened Sterling. Bumpy laughed. "I don't threaten people. I just explain how things work." St. Mary's Orphanage used the loan to replace their roof in May 1958. The work took 3 weeks. Cost, $8,200. Under budget. Sister Margaret invited Bumpy Johnson to the completion ceremony. He declined, but sent a $500 donation for new mattresses. The orphanage operated for another 34 years before closing in 1992 due to declining enrollment. During those 34 years, it housed 627 children. Many of them went on to college. Some became doctors, lawyers, teachers. None of them knew that their roof had been fixed because a gangster taught a banker a lesson in economics.
Bumpy Johnson died on July 7, 1968. He was 62 years old. Massive heart attack while eating dinner at Wells Restaurant in Harlem. Over 1,000 people attended his funeral at Abyssinian Baptist Church, the same church where Reverend Porter had preached about economic dignity 10 years earlier. Among the mourners were police captains, numbers runners, business owners, grandmothers who had known Bumpy since he arrived in Harlem in 1919. Also present, though standing far in the back where few would notice, Malcolm Reeves, James Crawford, Dorothy Perkins, Vincent Hayes, Thomas Green, and Reverend Isaiah Porter.
The 6 people who had sat in that back office at Small's Paradise and planned the bank run that brought Manhattan savings to its knees without firing a shot. They never told anyone what they'd done. It wasn't about glory. It was about respect. Charles Sterling retired from Manhattan Savings and Trust in 1964. He moved to Connecticut and lived there until his death in 1981. He never returned to Harlem after that day in March 1958. In his personal papers donated to Columbia University after his death, there's a brief journal entry dated March 19, 1958. Learned today that money has no color, only power. Learned it the hard way.
Manhattan Savings and Trust was acquired by Chemical Bank in 1972. The Harlem branch on 125th Street continued operating until 1989. The building still stands today, converted into a community center. On the wall inside, there's a small plaque that reads, "This building once housed a bank that learned to respect all its depositors equally." March 1958. Most people who walk past have no idea what that means. But if you ask someone over 70 who grew up in Harlem, they'll tell you about the time Bumpy Johnson shut down a bank in 48 hours using nothing but depositor withdrawals and the mathematics of fear.
The story isn't taught in business schools, though it should be. It's a perfect case study in bank-run psychology, community organization, and the economics of discrimination. When you tell customers their money isn't good enough, you're not just insulting them, you're threatening your own liquidity. Because money doesn't care who owns it. Money just flows towards respect and away from disrespect. And in March 1958, $890,000 worth of Harlem's money flowed right out of Manhattan Savings and Trust's doors, because one banker forgot that simple truth.
If this story connected with you the way it connected with us, hit that like button right now. Every like tells YouTube to share this with more people who need to understand how power actually works. Subscribe and turn on notifications, because we're documenting forgotten stories about economics, justice, and the mathematics of respect. Drop a comment and tell us where you're watching from. United States, United Kingdom, Canada, wherever you are, you're part of preserving these histories. Tell us, have you ever seen a community organize against institutional disrespect? How did it turn out? Your stories matter. Thank you for watching, and thank you for making sure stories like Bumpy Johnson's bank run don't disappear into silence.